Hello, everybody. My name is Michael Duke, and welcome to my channel where I discuss stocks that are interesting. So, if that's something that you find interesting, then please consider liking this video, subscribing to the channel so you hear more about it. Today, I have a very interesting video. I have covered this company before. It's a real estate investment trust in the cannabis sector. I gave it a glowing review in November sometime. One of the first videos that I made, I had significant weight of my portfolio in this company. Obviously, you see here that it has not performed well. I took a big loss on this stock and sold it at a loss to get out. So I'm going to discuss why I no longer like the company. And I'm also going to share, the what the volatility in this particular name did to my portfolio. Now, I graded this company. Sadly, I graded this company I'm trying to think of the way I described it. It was like a pounding the fists, pounding both fists on the table. Buy with both hands. I think is what I said. Regrettably, the stock has performed very, very poorly since that recommendation, and the reason for that is because the number one thing that could not happen did happen. As I covered previously, this REIT has a significant amount of tenant concentration, 16 or so percent of their rent roll tied up in the top tenant on their roster. The reason that the stock has performed so poorly as of late is because that tenant went into default. So let's just take a look at some of the damage. This is my portfolio here over the last year. I'm not going to go too deep into this, but the blue line here is my portfolio. The yellow is the NASDAQ. Green is the S&P. And pink is the Dow Jones. We see for the majority of this period, my portfolio has strongly outperformed the market, all three indices, and as of now, we're still up. But you see here in this month, my portfolio gave up a significant amount of gains right here, a very significant drawdown, much more volatile than the indices. And we see here over the last year that this one ticker has been responsible for the single largest amount of weighted average contribution in a negative way. Now, the reason that we saw such a steep drop down here and we only see a contribution of negative 2-ish% and an average weight of 5.5% is because I started accumulating this name when it was, 80 something. It dipped a little bit, came up, bought more, a little bit more, a little bit more. When the outlook continued to be very good. Again, it had dropped. I want to say it had dropped into this zone here. It had dropped by 20% on the election news, and that's when I had covered it initially. They have since posted earnings once again, but the stock has not really gone anywhere. So let's just take a look. Actually, this is going to be a different video than normal. Because I basically want to discuss that sometimes in investing in the markets, we can get, when I say we, I'm really saying myself. I know that I have a tendency, and I'm sure that some of my viewers might feel the same way. I know that I have a tendency to find a stock or an investment that I really, really like for some reason, that I'm very convicted will perform well. It just so happens that the majority of times when I've had such sentiment about things and I've entered them with size, that I've been correct. And therefore, my results have been good. However, this particular stock, I've been very hot on it. for several years now, and had been right about it. Gains of 50% in the name at one point, continued to increase position sizing. And the position sizing is so much of the game. This is a volatile stock. I discussed that in my prior video. The beta, being larger, greater than the market. It being a growth name essentially with strong income properties. Basically, there's a big lesson in this whole episode that the degree of risk with this investment was higher than the average, and I concentrated roughly close to 10% of my portfolio in it, which is not uncommon for me to do. Um, and I was wrong. It dipped, you know, and I had a month of correspondingly very poor performance. In fact, if we look at this, we see these are monthly returns. Again, blue is my portfolio. You see here, yeah, 8.5% drawdown in that given month. So if I had not put so much of my portfolio into this particular stock, then that pain would not be there. So concentration is a double-edged sword that works both ways. The reason that I ultimately decided to sell out of the property, or excuse me, the REIT, and not double down on it further, is because they declared, again, their number one tenant defaulted, which, their Seeking Alpha here has their dividend grade as being safe. I actually went through the math where I calculated in my own spreadsheet just the degree of safety that they had. However, one thing that I did not calculate was their largest tenant defaulting, which in hindsight obviously is a mistake, and that just changed the outlook. And so I think what I want to discuss here is less about this particular investment, but more to just discuss that um, out of all of the videos that I've made, the one that I made about this particular company was far and away the most ignorantly bullish about the company, performed fantastically poorly. And after taking a look at things, I decided that I wasn't going to, continue at least now until there is further certainty. Of course, now the valuation is much more palatable. I mean, it's at the lowest level that it's been. It's at the lowest level right now that it's been since COVID crash, March 2020, and it has grown since then. So, we got less than 10 times funds from operation, almost a 12% yield. My part of the reason that I was so bullish on this investment in the first place is that if you're going to play cannabis, that this company is essentially, the cash flows here are safe, the safest out of any type of cannabis investment you could make. While that may be true, the fact that the top tenant defaulted. In fact, maybe I should get yeah, look at this. So this is just 2 days ago. PharmaCann failed to pay rent again. Recall that it had issued a press release on 12/20 that detailed the initial default. Near the end of January, it reported a default resolution, though it warned the company it needed to refinance. It warned that the company needed to refinance its senior secured credit facility before June 30th. Okay, so this was the news that set it off right here. This on December 20th. You see here that corresponded to, it had dipped about 10% prior, perhaps on the news leaking, and then the day before it was $95 a share, and it tumbled all the way down into where it is now in the mid 60s. Significant volatility, right? So it defaulted on 6 of the 11 leases, which meant that they defaulted on all leases due to the cross default provision, which I discussed in my prior video. So basically, my whole confidence was based around that these tenants are going to continue to pay rent. that despite the challenges in the industry, that would not happen. The moment that happened, I was immediately like, okay, that changes the thesis. In hindsight, I, um, I'm trying to get better about this whole news based content piece, making videos more timely. I mean, that was 3 months ago that occurred, right? It's been a long time. It's been an entire quarter. I should have made this video then. However, I've been focused on making videos about new things that I'm looking at. So um, I've been wanting to address this and make a video about it, even if brief. So I guess the thing that I want to, a couple things I want to say about that is you see my results. So over the last year, my portfolio is up 21%. Meanwhile, all of the major US indices are up by 10% at best. So that, my track record as of late, very strong. The majority of the picks that I select end up doing fairly well. And another thing that I have had a tendency to do well over time is position sizing correctly. This is a small cap, highly risky company, and I, put a significant amount of my portfolio in it, um, and that strategy from time to time has created a lot of outperformance in my portfolio. However, the sword is double edged and the knife cuts both ways. So, what I wanted to illustrate is that even if you are competent when it comes to this type of thing, you know what you're looking at. I don't want to, say that I'm an expert by any means. I've had some modest success in investing in the public markets, even with your ability to assess things correctly. And I was right about this um, investment, by the way. I just entered into it with much more size here, and the yield on it was high enough that I felt comfortable borrowing to do so. So I took, leverage amplified my losses there. I also didn't have to sell it. The investment could do well from here because now it's in a state of distress. But when it comes to stuff like this, I definitely got caught with my pants down. So I want to address, from time to time, I will make recommendations, or not recommendations, but I'll, grade things that I'll give them a buy stamp and be wrong about that. And that's why I urge all of my viewers to do their own research and understand fully what they're looking at. Um, as we can all be wrong about this. And yeah, just be skeptical. Be skeptical about your beliefs and your attitudes, the sentiments that are driving your own investment decisions, and continuously be holding through that. And another thing, I'm comfortable taking a loss on a position to mitigate further losses. And that's what happened here. The price did slightly recover before I exited my position. um, I will still consider. I do have a position still in my IRA, not in this portfolio, but still am a believer in the company. However, realized that position sizing was key. I forget which investor talked about position sizing, but there's an investor on record out there. I think it might be Terry Smith, who says position sizing is 90% of this game, entering with the proper level of conviction and the proper level of risk mitigation. So, if you haven't watched my other video about this, I urge you to do so, just to get an idea of the context here. But hopefully, what I'm discussing here makes sense and is useful. And on paper, the company continues to do all right. My decisions in the immediate term are more based on what that says about the intermediate term outlook for the company. If the largest operators in the portfolio are struggling to pay rent and they are willing to default, to me, that's indicative that they're trying to negotiate the rents down, which is a critical arrow in the heart of the thesis to this company. Because it cash flows like crazy, this company does. But those rents are so elevated relative to non-cannabis uses. So if that's putting a lot of pressure on tenants who are struggling, then that might indicate that there's downward pressure on market rents coming in the sector. And that's a macroeconomic and microeconomic element of this niche of real estate that me as a shareholder uh, don't feel the need to wait out. So, anyways, hopefully what I'm saying makes sense. If you want me to dive a little bit deeper into certain aspects of that, comment below, let me know. And I'd be happy to do that. But hopefully, this video I'm making here appeals to those who saw my prior video about this. Have a good day.